And on this episode, we're going to be discussing the Genius Act, stablecoins, and what does this mean for the future of money. Stablecoins are digital currencies designed to keep a stable value, usually being pegged one-to-one with a real-world asset like the US dollar. Unlike volatile cryptocurrencies like Bitcoin, stablecoins stay in a steady price. Why are stablecoins suddenly being treated like the future of money instead of just the crypto side hustle?
Well, the US right now, they're trying to become the crypto capital of the world.
So now you're seeing that the government is moving away from central bank digital currency and going more to stable coins. And one of the biggest concerns of central bank digital currencies was always the surveillance. Basically, if the government created the money, they will always be able to watch where the money is going. And this is one of the reasons why I try to encourage people that even if you're not the biggest fan of cryptocurrency, it will be beneficial to you to actually watch where the technology is going. Something very huge is happening. I strongly believe that this is a change of our monetary system. All right, welcome back to yet another episode of the CryptoNoobz Podcast, where we talk about cryptocurrency and the world around it. I am your host, NelsonRecardo.X, and I'm here with my co-host,
Lamont Astwood, aka Crypto Lambo.
And on this episode, we're going to be discussing the Genius Act, stablecoins, and what does this mean for the future of money. So, Lambo, first off, what is the Genius Act and why has this been on the headlines for the past several weeks?
Well, the Genius Act, it stands for the Guiding and Establishing National Innovation for U.S. Stablecoins Act. And its new act recently put in place on July 18th, basically to regulate stablecoins. So it's designed to basically have more intense or increased regulation of stablecoin issuers in the United States. So they're trying to avoid any irregulated or unregulated stablecoins from operating within the United States, especially on a wide scale. So they have a focus on larger stablecoin issuers like USDT, USDC, and making sure that they follow proper guidelines and stuff like, for example, they have their reserves. So that's been a big question when it comes to stablecoins. Do they actually have the reserves back to back the coins that are in circulation? So every issuer must have, for example, they must have US dollars or treasuries. They must have US treasuries purchased to basically back the amount of stable coins that they issue that's in circulation. So it's just basically enhanced regulation for stablecoin issuers.
And for our audience, we'd want to explain what are stablecoins. Stablecoins are digital currencies designed to keep a stable value, usually being pegged one-to-one with a real-world asset like the US dollar. Unlike volatile cryptocurrencies like Bitcoin, stablecoins stay in a steady price. They combine the speed of crypto with the stability of traditional money. So now you have the best of both worlds. This particular coin that's something like the dollar that you could easily go and transfer that doesn't have these huge market price swings like cryptocurrency like Bitcoin and Ethereum. And towards the Genius Act, I really think that it's really interesting. We've definitely come a long way in getting it to the national level where now an entire act has been brought out showing that they're serious about bringing some type of regulation around this cryptocurrency. So that brings me to my next question, right? Why are stablecoins suddenly being treated like the future of money instead of just the crypto side hustle?
Well, the US right now, they're trying to become the crypto capital of the world. And they are trying to get in a position where they don't really have to. They're kind of like taking the opposing stance of issuing a CBDC or a central bank digital currency. So that's kind of like what they're doing. And there is a wider conversation on whether it makes more sense to have a CBDC or a stablecoin. Each one has its pros and cons. But that's basically why you see the United States is really pushing this whole Genius Act, because they're trying to get to the point where they could kind of forego having stable coins. Forego having to adopt the CBDCs.
And A part of the Genius Act is actually a clause that states that the United States will not no longer support the creation of central bank digital currencies, also known as CBDCs. Um, but does this mean that that's the end for central bank digital currencies? What do you think about that?
I am not gonna say it's the end of it. Now, in the context of the United States, I think this is like a real. They're taking like a hardline stance that they don't really want it. But I think globally, you will definitely have because globally, a lot of like the EU and a lot of other developed nations, they are starting to adopt the central bank digital central. But as far as it goes in the United States, I think for them to have a CBDC, you will have to have probably a whole new government because I don't think the Republican Party and even a lot of Democrats, they're not really in support of a CBDC.
Mm.
But it'll be interesting to see like if they ever revert back to that concept. But it seems like they're taking a hard nose stance against it.
Now, a central bank digital currency is a digital currency that is basically owned and controlled by the government, more or less. So you still have all of the speed and the cheapness of a cryptocurrency. So cryptocurrency basically allows you to just be able to transfer your money super fast, super cheap all across the world, right? A central bank digital currency uses that similar technology to allow you to be able to do that. But the currency is something that was created by the government. So now you're seeing that the government is moving away from central bank digital currency and going more to stable coins. And one of the biggest concerns of central bank digital currencies was always the surveillance. Basically, if the government created the money, they will always be able to watch where the money is going. And there's quite a lot of people that did not feel comfortable with that because this is programmable money if the government creates it. So when I see them actually making the stance to go to stable coins, with stable coins, it's more, it could still sometimes be programmable based on who's creating it, but stable coins still allow that ability, but it's just coming more from the private sector. That
Yeah.
leads me, that leads me into my next question. Why do you think like such big enterprises, I'm seeing PayPal, I'm seeing Visa, I'm seeing MasterCard. Why do you think all of these various enterprises are now going so hard into stable coins?
There's several reasons, and I think a lot of it has to do with probably they're finding ways to probably I mean, I don't really have the stats to prove this. They may find ways to basically execute transactions probably in a cheaper manner. And it does provide a level of like privacy. Like a lot of people like to have more control over their money and more less surveillance of their money. And if they're the platform to start offering stablecoin transactions and starting to do that, they could actually adopt a whole new consumer base. So I think that is several reasons for it. But I think that some of the key reasons is just that, you know, they're trying to be a little bit ahead of the curve when it comes to like offering that privacy for its clients, you know, letting them know like, hey, if you want your money off the grid or if you don't want Uncle Sam to take your money when you trying to transact, you know,
Uh,
you could come start using our platform. Now, they're probably going to actually start implementing certain regulations, even on stablecoin usages on when you look at like a lot of those payment systems. So it'll be interesting to see how it develops over there as well between like PayPal and a lot of these other payment systems.
Now, I do think I remember seeing that. I think that that America is doing something where they will ask people who have crypto to actually show how much cryptocurrency that they actually do have. I do think that that has a very strong chance of becoming law. It might already be law, but I remember seeing this somewhere. But now when we talk about the enterprise level, a few of the businesses I see now joining the fray of stablecoins, because that's the thing. As soon as that bill was passed, lots of businesses already had the infrastructure set up. and others were already building the infrastructure. And this is one of the reasons why I try to encourage people that even if you're not the biggest fan of cryptocurrency, it will be beneficial to you to actually watch where the technology is going, as something is happening, something very huge is happening. This is the change of, I strongly believe that this is the change of our monetary system. Just a few examples of some of the enterprise level changes that we're seeing, right? We're seeing JP Morgan partners with Coinbase to let 80 million Chase customers buy crypto directly. So what does that mean for JP Morgan? Now we could buy crypto with Chase cards. We could fund Coinbase accounts straight from Chase bank accounts, and we could redeem Chase rewards for USDC. That's 5 billion plus in moving towards digital assets. Now we also see PayPal launched Pay with Crypto, letting US merchants accept over 100 plus cryptocurrencies at checkout. Think about that now. This is just PayPal with America. So imagine now when it becomes more mainstream with it, more countries getting that access. That's instant conversions to USD to US stable coins. That's faster payouts. And you could also earn yield on PYUSD. That's PayPal's coin. Now, some other things that I also saw, I'm seeing where Citibank is running live cross-border tokenized payments with Citi Token Services, Goldman Sachs, and BNY Mellon tokenizing money market funds for institutional liquidity. Amazon and Walmart. Now you're seeing Amazon and Walmart reportedly exploring their own branded stablecoins. Google, Apple, X, Uber, Airbnb evaluating on-chain payment rails post the Genius Act. So what we're seeing is that a lot of different businesses at the enterprise level, they are all now going into stable coins because I think that it does give them another avenue, just another payment avenue that is faster, that is a lot cheaper as well for different customers. And I think ultimately they're just preparing and getting with the times. They're just getting with the times. Let's talk about, so another thing. So could this be, so could this be start of a financial system where stablecoins will replace credit cards and cash apps?
That is a
Like
sorry,
where's all
Stanley.
this going? Like where's
Yeah,
all this going?
yeah, that is an excellent question, and I think that is partially true. I think even if it doesn't replace it, I think it's going to become incredibly more mainstream. Because I think you sent me something the other day about Telegram allowing for transfers between accounts or something in crypto. Like
Yeah.
it's gonna be something where it's gonna be almost, because a lot of people, they don't really, who use their phone and who transfer money. Most people who transfer money do not use crypto to do it. So it's gonna get to the point where I think it's gonna start to become more so about a viable option. Like when you go to purchase stuff, just how it has PayPal, MasterCard, Visa, you're gonna start seeing crypto pretty much on almost every platform, all the major platforms. I think with stable coins, like we discussed it before, like stable coins, they provide that baseline value. So it avoids that fluctuation of value. And I think a lot of more firms are going to start exploring using stable coins as opposed to probably other cryptocurrencies. But I don't think it's going to ever replace the financial system. I think it's going to be in addition to it, but I don't think it's going to replace it.
I can't wait to start paying my Netflix subscription with stablecoins. I can't wait to do that. I honestly do think that it in the long term that it will replace credit cards and cash app. I think that in the long term. My reasoning for it, my reasoning for it is when we think of First and foremost, just how the United States wants to be the crypto capital of the world. They want to be more about freedom, right? And they're showing this with stablecoins. One of the things that come to mind when it comes to the debit and credit cards is you still have to do, it still is on the ACH, automatic clearinghouse system. You still have to keep in mind that you don't necessarily have that money as a consumer. Technically, the banks can still very much freeze those assets. And also, you also have to think about it from the banking standpoint where you still have to find a bank, get access to the bank, giving on all your KYC, and then you are finally able to get that particular card. And then you're actually able to go and make those payments. Whereby with cryptocurrency, you don't necessarily need KYC. Now, with more regulation, I expect that more businesses will try to become more regulatory compliant. So they more than likely are going to be asking for KYCs. Now, that's me being completely honest. But you also have to look at it from the standpoint of, as a customer, I have that money live and present. I have that money live and present. I could use all of that money if I choose to. It's going to be way faster than with ACH, with normal banks and debit and credit cards and all that good stuff. And it's a lot more convenient as well. It's inclusive and it's convenient. So now the cryptocurrency that I have on my cell phone, I'm just able to send it to Netflix, and in no time, my subscription is paid. So I can see in the long run, I think what's going to happen is it's going to become a lot more streamlined. This is when I think about crypto in the end game, I'm thinking we're going to get to a place where, although all these companies are making their own different cryptocurrencies or what's not, we're going to get to a place where we're only going to be using just a few cryptocurrencies for most of our day-to-day living. We're definitely going to be using our cell phones or whatever device we'll be using inside of the future, because, we might evolve past cell phones, and it's going to be way easier to send money. Even when I think about it, with your debit and credit cards, you're always at the risk of them being like stolen, destroyed, all that good stuff. And not to say that your cell phone can't also be stolen or destroyed. It's just that now we have a new system called the blockchain or distributed ledger technology, where technically your funds are on the network. So once you have access to the network, you could just go and transact as much as you want. Now,
Makes sense.
going to the central bank digital, I want to touch on central bank digital currencies just one more time. Why do you think they prefer stable coins over central bank digital currencies? Like, I know that you said that, the US is trying to become the crypto capital of the world and freedom and all that good stuff, right? But as from a use case standpoint, you know, like, why is it that we are just looking towards stable coins rather than central bank digital currencies? We could have do this with central bank digital currencies. Tell me what's your thoughts on that.
To be honest, I think the reason why they started it first was just really kind of like to try to win a vote. I could be honest with you. They knew that the crypto market was a big market, especially amongst a lot of young Republican men. So when you bring in the idea of bringing stable coins as opposed to central bank digital currency, that does create that, hey, we're not trying to get into your business, but the reality is the government is trying to get into your business. So they said, like, this is about allowing the people of their privacy. And I just personally don't believe the government is trying to allow you to have more of your privacy. I think this is more so just, hey, we're down for crypto. You're down for crypto, you're down with us. Vote for us. I think that was just a part of like the initial appeal to it. But there is aspects of it that make sense. But when it comes to like the CBDCs, okay, CBDCs, they're able to like better control, so they are better when it comes to anti-money laundering, right? Now, the problem with it, although it does increase surveillance, it does create that thing where people feel as though everything they do is being watched. And like in China, China is very much into the digital yuan, their CBDC. Basically, they have like almost like this weird merit system or something like that. Like basically, they could punish you and say, "Hey, you're not allowed to spend money. You're not allowed to spend your own money." And that is something that scares a lot of people. So when you have stable coins where they're able to avoid that government control, I personally would say like, all right, that would be something that allow me to be more autonomous and have more better control of my money. And that's something that a lot of people want. But I think the US, I mean, I think the Republican Party initially just did it almost just as a, hey, we're trying to get votes. But now we're going to push this thing to the next level because now they're introducing the Genius Act, which is there to enhance regulation of stable coins. Because right now, by them doing that, that's partly because a lot of these companies that are going to come under the Genius Act, they have now this thing where they have to issue monthly reports to the US government. So in a weird way, the money is still being monitored, but it's more so the issuer who has the whole of the standard as opposed to the individual. So yeah, I think this is I think it does create a new avenue. Now the problem is with stablecoins, and I think this might be something they would correct down the road, is if you want to take out like a loan or something, right? You can't really show them like your stable coins. You still like they still deal with dollars and US backed investments and equities and bonds and stuff like that. So that's gonna create some issues on certain people who try to acquire certain things. But not to say that that's not going to change down the road. But yeah, I think their pivot towards stable coins can make sense, but it's almost like they'll have to do proper due diligence and be on top of the issuers of the stable coins. They can't allow a situation like they basically can't allow a high level fraud situation in that case. If a big issuer is able to do that, then people lose faith in the government and how the government operates its monetary system.
Trump going to the moon, not financial advice.
And
I
that
think
right
that
there,
that's really
that
cool.
even that
Especially even the Trump
yeah,
coin.
Trump going, that actually came under a lot of scrutiny, especially like from the Democratic Party, because they was like, "This, how is this not illegal? You know, like how is this not illegal?" When this
But it wasn't. But it wasn't. But
Trump is
I
really
I really liked, especially like where you touched on the digital yuan and that level of control and surveillance, because that's that whole merit system based on whether or not you are following the government, you will be rewarded and or punished based on how good of a citizen, quote unquote, you're being. Another thing is like, I think that it could also be seen as a power play with the US doing this. Like, hey, once again, like we're about freedom. We're about giving you putting the power back into the hands of the people and all that good stuff. Like we're still going to surveillance you, right? But you have a little bit more control than other countries. I see that they're also still debating on whether or not they're going to push the digital euro. I think some countries still want to do the central bank digital currency situation. I do think that my personal opinion is I do think that it is something that many people don't want, but still stable coins could be a really good alternative because it's done by the private sector. So even inside of the Bahamas, we still have our central bank digital currency, the sand dollar. Shout out to the sand dollar. We love you. We love
yeah,
everything Bahamian.
yeah. And what is interesting is the sand dollar. If I'm not mistaken, that was the first central bank digital currency.
Yep.
Yeah,
And that
that's
was the
that's
very
pretty
first.
impressive. Yeah, that's pretty impressive given our size and all that. Because right now you have, I think the EU is experimenting with it. But like you have a lot of countries based in the EU, so that's gonna present some challenges. But I think they probably can pull it off. Then you have Nigeria, A couple of countries who are trying to experiment with having their own digital. Right now, they're like in the early pilot stages of it.
See, honest thoughts is a central bank digital currency can work, you know. The main issue is whether I think the main issue that most people worry about is whether or not the government is going to use it to like freeze people's assets. I think that's the part that kind of scares people. Like, if you're gonna freeze my assets, and if you're monitoring my payments, are you gonna use that against me? But on paper, it's if it's a digital currency that is that if it is you know that is something that a lot of people would want, you know, basically cash app, but cash apping with not just your country, but basically cash app, but with all the perks of cryptocurrency. But one of the reasons why I actually like the idea of stable coins a bit more than central bank digital currencies is like now you have cash app basically with the world. For an example, like I am able to transact dollars with my friends in Nigeria. You know, like years before there were hoops and hurdles that I would have to go through to go and make certain transactions. And now I could send someone $100 from the Bahamas, and they're inside of Nigeria or Spain or wherever they are inside the world. And it's seamless. It's very quick, and they're able to use that money as soon as they get it. And this is where crypto is going. And I think where we're going with stable coins, like coins that actually are usually pegged 1 to 1 with the dollar or with stable assets, I think that it's a really good thing, because now your value holds and you're still able to make those super speedy transactions.
Yeah.
Yeah.
Both of them have their pros and cons. I really don't like. I don't really have a clear stance on when I think one is better than the other. Both of them, they do come with their risk and their rewards, really. But I'm not. I'm kind of on the fence on which one I think would be better for economy. And take certain things into consideration when you're dealing with certain economies. You'll take like size, their their trade activities, different infrastructures.
Definitely infrastructure. With it, I would definitely say a major part of it, first and foremost, I think that I would rather look at cryptocurrency or digital currency as a whole as an alternative. That's how I like to look at it, because I I encourage people to look at it as an alternative, you know. If you don't want to do it this way, you could do it that way, because some people are very much digital currency as a whole at first. They are not really interested in anything digital. But from more of a tech perspective and a futurism perspective, I can see us moving towards a world where we're using more digital currencies on a regular basis. That's when we have our particular coins that we use. We have our particular apps that are really seamless and easy to use, simple, and basically everyone has that one plugin, like the same way how we would put in our email address and then just plug in our debit or credit card. We would just have that seamless plugin where, hey, add your wallet, cool, and now you're able to send money wherever you want to go to.
Makes sense.
Yeah, man. But yeah, so that is the end of our episode today. I'd like to just remind everyone that everything discussed in this podcast is just for educational purposes only. This is not any sort of financial advice. Please purchase Trump coin at your own risk.
Yeah, definitely. Make sure you purchase the right one.
Make sure to purchase the right one is correct. Yeah, I'd like to encourage you guys to continue. Hold on, give me a second. Continue to subscribe, watch, and share Every share goes a long way. Every subscription goes a long way. And yeah, we're going to be having even more conversations about this. If you want to contact us, you could always message us through any of our social medias for any questions, and just look out because we're going to be doing a whole lot of more new things. So with that being said, thank you once again, Lamont, for coming on. You're an
No problem, man.
excellent co-host. And thank you to all of the audience for your time and attention. You guys have a great night.